And I'm not here.
So I think you can take away the nameplates and we'll just sit. Yeah. Shut the door.
Who starts and how do you start?
You start.
Good afternoon. Welcome to this IBA press meet. I think you all have got the press release also with you. Major announcements made is cut in repo rate by 50 basis point and correspondingly cut in reverse repo and MSF rates. Then there is a talk of stress assets being shown in the financial statement, ECB raisings, and in general about the economic situation. In general, the press release is already with you. So if you have any specific questions to ask on, and then we'll be happy to.
Specific question to Chandra Kochar, ma'am. The gentleman sitting to your right has already cut interest rates, base rates. To your left, okay, sorry. To your left has already cut interest rates by a further 35 basis points. I mean, aside from that, the governor's given a 50 basis point repo rate cut. Should most of this at least get transmitted, or do you think only half of it, like in the previous instance?
No, I think clearly interest rates will come down, base rates will come down, and a large part of the cut will get transmitted.
Large part, could you give us some more specifics? Also, because marginal cost of funding is something everybody is now going to shift to. When is ICICI Bank going to make that move? Does it really agree with the model that you have, or will you have to wait for it till April 2016 to do that? So, if you could put all that into perspective and how much of transmission, because special focus has been given on transmission in the policy statement as well.
So ICICI Bank is actually since long been following the marginal cost of funding in its calculation of base
You
rate.
mean
So
you didn't pass the 35 basis points?
no, we did pass, and that's why, if you remember, we were the first ones to cut the lending rate, the base rate, even when the cuts started, and with the largest amount to start with. And therefore, as I said, that further cuts will happen. And when I say a large part of the thing will get transmitted, it should mean more than half. But beyond that, I can't sit here and take my ALCO decision right here. Let the ALCO decide.
Will
but
there be a
clearly you'll
little
see.
more transmitted for home loans, because low value home loans are now going to attract lower risk capital, lower risk weights?
Yeah, so we'll see how that's definitely a positive impact. But again, as you've seen, home loan rates anyway, have been moving down, irrespective of the fact whether base rates came down or not. So I think home loan rates are also very competitive, and as the regime becomes softer, rates will become softer across.
When we asked the governor how much of a transmission he really expects, he went so far as to say, the governor went so far as to say that he believes that the entire 125 basis points, if we look at the start of the year till now, should be actually transmitted by the banks. He's also said that he is going to spend a large part of his time actually working with the government to look at impediments that are coming in the way of banks actually transmitting. So of the 125, so far we've only seen 30. So when you say a large part will be transferred, so you're not talking about just the 50 that has happened today, but taking into account the entire 125.
Yeah, see, I exactly said that we cannot get into specific numbers and specific basis
but
points
you're
just now. That's the
large part
that's
of the
the decision of
125.
the ALCO. Also, it said that it gets transmitted eventually. So there's always a phasing and a lag that happens, and that's essentially what's happening. So
But just to clarify, you're saying large part of the 125, not just of today's 50
Governor
eventually.
said that he will be taking up with the government also on transmission of rate of interest,
That's
which
the
which
point.
which which clearly indicates that our interest rates are not only governed by
So if I had
these
to take
factors,
that
but
point
that has to
forward.
be also taken into.
When you also meeting with the governor, the finance minister held a press conference.
At 12
Right.
And they announced that they are going to lower small savings rates. So that was exactly the point the governor said. So Mr. Puri, you see deposit rates falling further because the government has committed to lowering small savings rates.
Let me rephrase this. So as of now, we find that the economy is going to start to pick up. So obviously demand will also increase. If that pickup doesn't happen and supply exceeds demand as far as credit is concerned, then you will obviously see a drop in deposit rates. If there is an uptick in GDP, then you probably won't see a drop in deposit rates.
Lower the GDP. Yes, lower the GDP.
So then there will be a drop.
So
No, what I'm saying is, given that today, the incremental decision you are faced with today is a further cut in repo rate of 50 basis, plus the government is saying it's going to abet it by lowering the small savings rate. So does that give you elbow room to lower deposit rates, is what I'm asking.
I think so.
Yes, it does give elbow.
I
It
think
does
so.
give elbow.
Yeah.
And that's why I think, you know, when you said the impediments to discuss with the government, it's about discussing the interest rate scenario in the rest of the financial system and not just deposits.
that's the point I want to come to. What are the other impediments?
How much is the cost of funds for in the last quarter?
So you're talking of which cost of funds?
No.
Average cost, marginal cost, total cost?
Cost of deposits, cost of borrowing.
Yeah, cost of deposits, cost of borrowing. Which cost are you talking about?
Average and marginal.
If you're talking about average, it hasn't fallen
Okay,
much.
marginal.
And that's the basic point that you must understand. That average is a stock where the denominator is very large. And when you're only going to get the new deposits at the new rate, the overall cost of funds for the banks will not fall substantially. The marginal cost will fall. And that is then a definition of how you calculate marginal cost. But then it must be clearly understood that most banks will have an issue with the margin.
I want to just talk about the government impediments, and I know Mr. You made a speech yesterday as well, ma'am, at the IB as well. The governor made it quite clear that they're going to be in conversation with the government to try and remove as many impediments as possible for a better transmission. What are some of those impediments outside the small savings schemes and the rates that are so high? That is there anything else that is in discussion? We talked about power discoms. Is there anything else outside that? Because he was very categoric to say any other impediment, including small savings schemes. So that was mentioned separately, of course. But outside that, what can the government? What role does the government play at this point?
No, major impediment is savings rate only. But outside that, you have some other schemes also where rate of interest have to be looked into. So major it is.
What about
major.
discoms and what about power loans, where there is active discussion at this point between the government and power producers and the states as well? Does that also need a very quick resolution and a good resolution at that, for you to be able to generate better credit offtake for some of the corporate side as well, which is saying that banks have been reluctant because the risk premiums have become too high and there are lots of projects that are stuck at this stage?
No. A resolution of stress projects, of course, is a priority for us, and discoms is a priority for government also. So the sooner the stress assets are de-stressed, it is better for the bank, and of course, if the credit demand picks up, then to that extent they are helpful to you.
But see, let's not confuse the issues about transmission and interest rates and about some of the sector-specific reforms. I think when we talk of transmission and interest rates, that's where the interests around the small savings schemes, etc., become relevant. On a separate issue of, you know, whether discom reforms are required, I think we've all said that discom reforms are required, because with so many positive changes happening in the power sector, I think to take all those reforms to their logical conclusion, we also need that the health of the discoms should be, they should be healthy enough to be able to buy power at the appropriate price.
So let me let me try to rephrase it, attempt a better answer on the transmission bit. You said large part would be transmitted. What are those various factors which, if they come into play, the impediments which go out of the system will lead to a fuller transmission going forward?
No, I think we are beating this now to a hell of a lot of detail, which cannot be done without an ALCO deciding an actual number. I don't think one is talking of any such other impediments. One is only saying that always the transmission happens with
know,
a
I wanted
lag,
a
and so many things have happened. Actually, the cost of deposits has come down. Now there's a further reduction in the repo rate, and all this will lead to reduction, a path of reduction in the base rates, and you will see that happen soon.
a couple of other numbers. How much is the mark-to-market gain for your bank with the bond prices rising post this cut? And further, HTM is going to become now 21.5. What approximately may be the cost to the bank, net?
Have you calculated it? Not yet calculated that, yeah.
Not you, Mr. Puri.
Apart from listening to the governor.
Yeah. and then we were talking to the governor. So.
रिजर्व बैंक के गवर्नर पे प्रेशर आ रहा है बार-बार कि वो रेपो रेट कम करें और बैंक्स जो है वो आम आदमी तक वो नहीं पहुंचा रहे हैं। तो सवाल वही पूछा जा रहा है कि आपको एक्चुअली इम्पेडिमेंट्स क्या-क्या हैं? क्या आप आम आदमी को समझाएंगे कि रेपो रेट इतना कम होने के बावजूद भी आम आदमी का होम लोन और उस रेट में वो नीचे नहीं जा रहा है?
नहीं, इम्पीडिमेंट्स तो आपको बता दिए गए जो इम्पीडिमेंट्स हैं. अब until unless those impediments are there, reduction becomes difficult. But we are working on reduction of interest rates. LCOs will meet, take a call. और हाउसिंग लोन तो ज़्यादातर सब बैंकों के उनके बेस रेट पे ही हैं वर्चुअली. ऑल द बैंक्स हैव हाउसिंग लोन. दे कैन नॉट गिव बिलो दैट. बट जैसा कि रेपो रेट कट है और जैसा मैडम ने भी कहा, ट्रांसमिशन विल हैपन, बट नो वी कैन नॉट क्वान्टिफाई द ट्रांसमिशन इमीडिएटली सिटिंग हियर.
तो सर, जैसे गवर्नर साहब ने भी कहा कि उनको उम्मीद है कि जब आप फार्मूला बदलेंगे तो उसका इम्पैक्ट दिखेगा. तो पुरी साहब के बैंक में 35 बेसिस पॉइंट का फ़र्क दिखा, ऐसा उन्होंने बताया है. तो आप लोगों के बैंक में कितना फ़र्क होगा सिर्फ इस फार्मूला बदलने की वजह से?
नहीं, अभी बदला हुआ फार्मूला पहले तो आने दीजिए, देन ओनली वी कैन से कि कितना होगा. देयर इज़ अ कमिटी ऑफ IBA सिटिंग, देयर आर 5 people sitting working on that. Then only we can say, but the purpose of that formula is of course that this marginal costing basis पे interest rates should come down.
तो जितना इम्पैक्ट HDFC बैंक में हुआ है उससे कम या ज़्यादा कुछ अंदाजा?
सब बैंक्स का पोर्टफोलियो अलग अलग होता है, सब बैंक एसेट्स लायबिलिटी अलग अलग होते हैं, सब बैंक का कस्टमर प्रोफाइल अलग होता है. सो यू कैन नॉट, आई कैन नॉट कंपेयर कि HDFC ने 35 बेसिस पॉइंट करा है तो मैं 20 बेसिस पॉइंट करूँगा या 50 बेसिस पॉइंट करूँगा. दैट कंपेरिजन इज नॉट पॉसिबल.
Sir, RBI has some concerns about cyber security, and they are also planning to come with some different subsidiary because banks are under-reporting. So, do you agree with this fact?
No, cyber security is a major concern for all the banks. So many frauds have happened because of cyber issues. So that's a welcome move that we have some subsidiary to monitor and control the cyber frauds issue.
They've opened up the room for more FPI investment in government bonds as well, now moving the rupee term the 5% the outstanding stock. Does this reduce the pressure on the banking system for government financing and the burden of government financing? Because even though SLR is at a certain level, the holding by across the board on banks is much higher. Do you think this has any actual change on the ground when SLR gets reduced, or banks will continue to hold on to much higher levels of SLR because credit offtake is still not picking up?
No, again, 2 points here. I think the increase in the FPI limit is a welcome step because, in a way, it is opening up one more larger source of funds for this. So that's a welcome step. As far as the bank's holding of excess SLR is concerned, that also partly depends on how the credit demand picks up. And if the credit demand picks up more, then the excess SLR holding would come down. If it doesn't, then there is a...
Heading into festive season right now, so what's your forecast to pick up this? By the projection of growth, at least from the governor, this is going to be a tough 6 months. It's really only next, and there's a big shift in the governor's projections from the RBI from 7.4 this year on the GBA basis to 8% next year. So do you see the pickup in credit really taking off next year? Q1 is always a slow quarter for credit.
No, I think we are all seeing retail credit growth to be quite robust and substantial, and in fact we believe that as the festive season comes in, if at all, that should only pick up. We are seeing the car sales growing in a quite a balanced and robust manner. We've seen the commercial vehicle sales growing in a robust manner. We are also seeing that with the government spending that actually at least happened in July and August, some of the contractors have started getting contracts. Some some of the very large ones, some of the very small ones. So I think in that sense, all these are signs of activity, where at least the credit demand will go up.
Ma'am, on the credit demand,
Enhancement to infra bonds was allowed last Thursday. Do you see your bank itself taking interest in that enhancement happening? And the same question to you, Mr. Puri, is that will ensure you as well.
And of course, we will examine it. And fundamentally, it's a right step to promote the bond market, because obviously you need the credit enhancement, because the investors who are there, they're more likely to have higher limits for a higher rated bond. So most of them have AAA, and as you start going beyond the BBB, the ability to invest for the pension and other funds. So this is an effort to develop the bond market, and I think it's a good effort. So of course we'll dabble in
You
it.
already identified something with credit enhancement. What I mean is it happening very soon? It's good investment.
Lata, you are very impatient.
See, this was
It
started
will
by
happen.
IIFCL, and it has not picked up that much. Banks were also trying to get it. I think with the bond market getting up, I think this will happen. Because pension, and as Mr. Puri has rightly said, they were not able to invest because of low credit rating. So things will happen, I think. But have, as he says, have patience, things will happen.
No, it's been in the works for some time, and there are enough existing infrastructure projects. So will you be?
So if there is a demand will be enhanced, answer is yes. And you and me have had enough discussions about the development of the debt market over the last 15 years. So that's why I'm a little hesitant to give you the time frame.
Sir, one thing that the policy statement also mentions is about some divergences between the asset
No, but I think
classification.
it's a great development for the deepening and strengthening of the bond market. So I think we should welcome it and gradually see how it progresses.
Ma'am, with the
Sir,
Amtech issue,
when we're talking about the monetary policy statement also talks about some divergences between the banks and the regulator in terms of asset classification and provisions, but it doesn't clarify what exactly are these divergences. Anything that the governor has discussed with you, or any clarity on that front?
No, I think that's mentioned in the monetary policy. I think the issue is that as the inspections take place, there's there is a whole lot of discussion that happens between the regulator and the regulated entity, and at the end of that, there is a list that is arrived at. So I think we have to see how this
But
process
is
moves.
that somewhat of a serious concern? The divergences are those of a very serious nature.
Will a lot of skeletons come out?
That's right.
No, I think we have to understand that there is a very, clearly laid out rule-based policy of the Reserve Bank of India, and I think we should not undermine, the principles of asset recognition that are laid out, whether it's for NPA or whether it's for restructuring. Also, we should not undermine the fact that there is substantial provisioning requirements for even the NPV loss that you incur if you restructure a project. So I think one should not undermine those, and therefore the banks have been following those in any case. This is a process that we will further see how it goes through. Let the let a round of inspection go
This
go with
diversion
it.
comes in normally all the AFIs. But should
It's
not
a
be
matter of
Huh,
discussion
yes.
after that, and
as a part of BAS,
Much more importance and empowerment as far as the joint lenders forum is concerned. How do you see it going forward? Do you think substantially change?
and responsibility. So I think 2 or 3 very positive features here again. First of all, on the SDR guidelines itself, I think it's been enhanced substantially to say that even when new promoters bring in money, or there's conversion or exercise of pledge, all that can be classified as SDR, which were all the recommendations of the banks, and we are very happy that RBI has approved all those. On the JLF again, I think the EG is clearly one more level of strengthening. What we have to ensure is that as a system, we don't make it a bureaucratic level of one more round of approvals. I think we have to use that forum more for monitoring, for making sure that, all the banks are falling in the same direction, in the same kind of, moving in the same direction, and that whatever gets decided then is moving fast. So I think that's why I said responsibility. The responsibility is to ensure that we do not create this as one more bureaucratic layer, but actually use it to expedite the process.
Ma'am, as a part of Basel framework, the RBI has come out with large exposure norms, which the draft says the computation is moved from the total capital to the part of tier 1. Now that's going to implement in March 2019 in line with the Basel committee. How much do you think that would be a problem in terms of exposure to big corporates, especially the Maharatnas and PSUs that you all fund?
Yes, I think that's why a very long timeline has been given, which means that, one would not create a destabilizing impact on the banking system or on the corporate sector.
But on the final norms is...
There's a long time, it's about 4 years.
But on the final norm also, are we going to see 25% cap on the tier 1 itself, which is what the draft says? Has there been any discussion on those lines?
It is a draft only, so let the final thing come.
I want to come back to the JLF point. It also gives the provision for smaller lenders or any lender to exit the JLF by selling off their part of the loan to a larger lender. From some of the conversations we had, we indicated some of the smaller banks that they were not able to take on the restructuring as well as a larger bank because of their good scrutiny. Do you see that speeding up restructuring and speeding up the JLF processes as well?
No, I don't think...
the provision has come in, so there obviously must have been a demand, especially, and by the looks of it, it was coming from the smaller banks.
No, therefore I am saying from a smaller banks, I have not seen any such smaller banks not taking the share under JLF or yeah.
Would be a lot higher when a larger bank would be able to finance that for a longer period.
That is true, but so far at least we have not done anything, Mr. Bansal, I am not aware, but so far that is a good mechanism where smaller banks, because sometimes the demand from smaller banks was that we don't have any other alternative but to follow the majority. So therefore that has come into play, and so far we have not done anything in that direction.
They have reduced the risk weighted.
Hello,
Sir,
hello,
you want to
down in the back.
See, all this is only on the negative side. Can we look at the positive side? The positive side is that the interest rates will come down. That's number one. We can debate on as to which bank will bring down. The second positive is the government and the RBI has clearly expedited to make recovery easier. The third is there is clarity on what will happen on liquidity between the liquidity cover ratio and the SLR coming down. The fourth is that they are working on getting the projects unstuck. And the fifth is we are telling you that there's enough money if anybody wants to put on a project, provided you will return our money.
So they are looking at reducing the risk weightages for the housing sector.
So people will have less burden going forward, and therefore probably SMA 1 cases will have will not get into an NPL issue. And secondly, an empowered JLF and for other reasons. Can we say the system has recognized most of the NPLs for the system? NPLs will at least start tapering in forward.
No, I think right now, instead of debating what is recognized, not recognized, and so on, I think what we need to look at is directionally, are we moving in a good direction? And clearly we are, because first of all, reduction in interest rate itself helps reduce the interest burden. And that itself is the first positive for the existing borrowers as well. Then it becomes a next positive for enhancing credit growth, because more and more people, even when you talk of a small borrower, wants to take a little bigger housing loan if he or she can afford the EMI. So I think that's the next positive. The third, as Aditya Puri said, that the whole monitoring mechanism is only getting more and more strengthened, and it's giving you more ability to not just structure, but for everybody to move together. And then beyond this, in fact, if you see even what the governor has said, he said he was watching 4 things as far as the interest rates is concerned, and all 4 things he's actually walked the talk on each one of those. And even when he's talked of monsoon, he's recognized the fact that government has taken so many efforts to actually control the food supply, manage the food supply and control food inflation. So I think these are the positives that we should look at. And let me therefore end with that positive, that every time when you ask a question, will interest rates come down, we say they may, they are likely to. This time we are saying they will come down. So I think let's end at that. Thank you.
Just to understand, sorry, I'm the foreigner in the room, and a lot of things are still not clear for me. The small saving programs is something that has had banks worried for a long time. So now that the government is reviewing it, is it a strong factor in you lowering your base rates? Meaning, if the government lowers that rates, is it something of an automatic move on your side that you will also lower them?
It's a good step in the right direction. When they lower the rate, then we lower the deposit rate, then we lower the base rate, but it's coming down.